Greetings. Now, why was March 15th, 2020 the Netscape moment in economics? Well, as you can see from this Twitter stamp, note the date. March 15th, 2020 was the Netscape moment of economics, and I said that at that time because a number of seminal changes occurred, at least in the US Federal Reserve, that indicates we were shifting into a greater speed of acceleration regarding the economics of technology. So I said this Twitter stamp on March 16th, 2020. However, the LinkedIn stamp, because I was a bigger user of LinkedIn than Twitter at that time, was exactly on March 15th itself, and I said, mark my words, March 15th, 2020 is the Netscape moment in economics. And LinkedIn stamps don't have exact days, but if you go through my archives, you will see that this in fact was on March 16th, 2020. So coming over here, what has transpired since that point, and why was this a Netscape moment in economics, and what does that even mean? First, as an introduction, consider the original Netscape moment, which was August 9th, 1995. August 9th, 1995. What happened then? There was an initial public offering of a web browser company called Netscape, and for the first time, many people who had never used the internet before started to see a graphical internet through the Netscape web browser, and the entire world started to change very quickly. And the following 4.5 years from that point was a huge boom in all internet-related companies, known as the dot-com boom, and there was a bust and a correction, but we ended up going much higher than the peak of that prior dot-com boom. The reason that particular date was important was because the success of the Netscape IPO triggered an investment boom in internet companies that can be traced to that exact day. So a Netscape moment in economics, what does that mean? That means it was a day in which the truths that I often describe and have written about for years before 2020, and many of you are familiar with, just got a huge amount of proof in its favor, and a lot of my predictions were proven to be true. So when you consider that I predicted this at that time in March of 2020, and with these Twitter and LinkedIn stamps, what were the events that transpired on that particular day? Number one was the Fed funds rate. The Fed funds rate, as we know, in 2007 was too high, and that triggered a real estate price collapse because they raised the rates for no good reason. They raised it just because they thought there was going to be some chance of inflation later on, and these Federal Reserve economists are very theoretical. It caused a tremendous real estate bust. They lowered rates to zero, and they kept their rates at zero, the Fed funds rate, for many years, you can see from this chart. That's about as low as they can lower it. They can't lower it below a range between 0 and 0.25%. Then in 2015, they got the bright idea of, oh, this rate decrease was temporary. Let's start raising rates, even though there's no inflation, no evidence of any inflation, but we assume there's going to be inflation, and the textbooks that we memorized from the 1970s say that there should be inflation if interest rates are this low, because 2020 is the same as 1975, of course. Why would it be any different? In the mind of a PhD economist, those are the questions that exist. And since they only get feedback from other PhD economists, the fact that they're all wrong by all believing the same thing just never occurs to them. They raised rates, and again, there was a stock market crash in late 2018. So they started to lower rates, but in small dips. But on March 15th, 2020, because of the COVID-19 crisis, they did something they never would have done without such a severe shock to the economy. They lowered the Fed funds rate to zero in one big shot. They think they can only lower in small dips, and when they have to reverse the actions they were doing just months prior, that shows that they don't know what they were doing at all, and they're really just guessing, despite 600 PhDs being on staff at the Federal Reserve. But nonetheless, they lowered it to zero, and they still think they are going to raise it back up again. They learned nothing from this episode or these prior two episodes, the 2006 through 2009 episode and the 2015 to present episode. They still think that the normal interest rate is 2.5%. But what has been proven, even if they can't figure it out, is that 0% Fed funds rates are here to stay. And even that is not low enough because, as we know, $17 trillion of bonds worldwide have negative interest rates. Negative interest rates. $17 trillion of bonds worldwide. And this video describes that over here. But it's not just 0% interest rates that were needed. They needed to do more quantitative easing. The quantitative easing that they had stopped. They had to restart that again. So we go to the Yardeni report that we describe every month. And the red line is the US Federal Reserve. And while no other central bank in the world has actively decreased the size of their balance sheet, This is a measure of how much cumulative money printing they have done. The US Federal Reserve started doing that and were forced to reverse it when? On March 15, 2020. Now, from a world perspective, the US reduction and extreme reversal of course into more money printing is not that noteworthy. So thank God there are multiple central banks, otherwise we would be at the mercy of the completely clueless PhD economists at the US Federal Reserve, who have predicted 100 of the last 0 bouts of hyperinflation and still think that's some imminent threat, even though it hasn't been there since 1982. Just because they memorized textbooks that were written before 1982 and they cannot evolve into the modern world. They are just intellectually unequipped to do so. When you see the full world total, the US reduction was creating a flatness in the entire world's total, which is unfortunate, but the COVID-19 crisis forced things to get back on track. So this extreme amount of money printing, which everyone thinks is going to cause hyperinflation any day now, is really just a reversion to the trend line. Look at this trend of cumulative money printing. This shows that the technonomic medium of the world, which got to a point where negative interest rates are necessary because the amount of deflation being generated is enough to distort the existing macroeconomic structures. All of that is just a very well understood by people who watch this channel curve and extremely predictable. I can tell you how much money printing will be done over the next 12 months with some degree of accuracy. I can tell you how much will be done over the next 8 to 10 years. And the answer is between 60 and 90 trillion dollars more of money printing over the next 8 to 10 years. And I'll have other videos describing the mathematics of that in considerable detail. My predictions have very high accuracy and have had for now 16 years. But this was what jolted those central banks into action. And now the genie's out of the bottle. They will never be able to clamp it down. And the big surge in money printing is behind us as well. As I described in just the monthly update that I released a few days ago over here, you can look at that video for a very brief summary. The year-over-year growth rate of the chart above, the percentage year-over-year growth rate, it's down to just 15.1%. That is in fact below the band that I say is optimal to offset technological deflation. I say this rate has to be between 16 and 24% a year. Even this brief peak up to 46% did not cause any aberrantly high inflation, and now we're down to 15.1% again. This hardly shows that the rate of printing is going out of control, because the percentage year-over-year growth rate has returned to this band, and they only do what is near the bottom of this band. They could do quite a bit more and still not have aberrant inflation. But that is why March 15th, 2020 was in fact the Netscape Moment of Economics, because this notion that the Federal Reserve has to keep the Fed funds rate at 3%, which will never be again for any substantial amount of time, probably never even for a short time, because the stock market will punish the Federal Reserve for even attempting to go over there, combined with the new quantitative easing that they thought they would never have to do again because they just don't understand the relationship between technological deflation and QE, March 15th, 2020 was the Netscape Moment of Economics. Now today, October 23rd, 2021, is about 19 months after that point. And still very few people have truly accepted the new economics of technology, but this was evident even years before. My Atom publication was released in early 2016, and I have articles going all the way back to 2006 describing this relationship. Now the evidence is way more. In fact, the amount of evidence in my favor is also rising exponentially. The economics profession has failed at its primary job. They had one job, and they failed the "you have one job" test. But March 15th, 2020 was the Netscape Moment of Economics. We will never have a single day that is that seminally important in the history of economics again. There may be other days that ratchet us higher, but that is a day of just as much importance in economics as August 9th, 1995 was in the history of the technology industry. And the events that have transpired since then seem to corroborate that. Now, these are complicated subjects if one has studied any classical economics, even if it was one class in college, or even if you watch the mainstream media. But it's extremely easy to understand if you understand the relationship between technology and deflation and the monetary creation needed to offset that deflation. And I'm doing my best on this channel to make sure more people can understand that. But it's a tough slog. We'll slowly get there. Time is on our side, and the events that unfold continue to be on our side. So I hope you found this video to be informative, And if you like this type of content and you believe this type of information is useful to you in your day-to-day life, I encourage you to subscribe to this channel. And thank you very much for watching.